The case now is not maybe the repo market yet, but it's just a fact that, yeah, they're monetizing the debt. There's too much debt in the system. We've heard of how much they need to issue this year, the Treasury, like 8 trillion or so. And the financing costs continue to go up. And Mr. Besant is watching very closely. Wednesday, May 7th, 2025, Moneco 64, home of alternative economics and contrarian views. Well, today we're going to look at the Federal Reserve. It looks like they're doing not QE again. And that could be a signal that we could see real QE in spades in a matter of months, because there is a historical precedent for that. Before we go into that, just look at some of the headlines out there, and we're going to look a little bit at education today, which is a very important topic, of course. Let's start with some of the headlines this morning. India launches military strikes on Pakistan. Well, that's the FT reporting. Yes, that's very worrying. It's to do with the region of Kashmir, which is Indian administered, and those two countries, of course, have nuclear weapons. Of course, we've been speculating, or the world's been speculating about an attack on Iran and World War III, and here we have something kind of out of left field, even though it's not unexpected. We'll have to keep an eye on it. I see that the German Chancellor was picked or voted upon yesterday, but he had to go through 2 votes, and that shows that there's something wrong with the German political climate right now. Very unstable. It's the first time since the Bundesrepublik was created after World War II that the Chancellor needed 2 votes. Usually it's a formality. So in the first vote, he didn't get enough of a majority. And I think this is another symptom that you can add to those symptoms of currency collapse that I've spoken about. I've looked at the US a lot, of course, the symptoms there, but in Europe is just as bad. Here in the UK as well, we have a lot of political uncertainty and chaos, I would say. We have a new party that's doing really well, and that's the first time in those over 100 years that the uni-party UK system is being challenged, because that's what we have in the UK. We have socialism. No matter whether you have the Conservatives or Labour in power. It's one of the reasons why the West, the US included, because the US adopted socialism in the 30s under FDR. It's one of the reasons why we are in such a major decline, I would say. I spoke about this almost a couple of weeks ago in one of my live streams, the collapse of the West. I mean, socialism didn't work in the Soviet Union and Eastern Europe. That collapsed. And I still think, yes, hopefully it will collapse here in the West. It will feel bad for many people who depend on it, but for those of us who know the evils of socialism, and to that I include also corporatism and the warfare state, all those together. For us, it will be a good thing. Let's hope it happens. What else is there in terms of headlines that I must not forget? Well, this one is important. China announced yesterday that it was going to have a press conference to announce today some measures to try to stimulate the economy, the markets, and improve trade. Well, they did it. It says here on Bloomberg, China cuts key rate reserve ratio to aid economy hit by tariffs. It doesn't look like too much, but their rates are very low in China. So the PBOC, they cut the 7-day reverse repo rate from 1.5 to 1.4, and they're gonna trim the reserve requirement ratio by 0.5 percentage point. That's the ratio that banks need to keep in terms of reserves. They're also saying that they might start talking to the US this weekend on trade. That's the other point they made. The markets really didn't do that much. They were up slightly. The Chinese stock markets, the 10-year yield, I think, government bond went up 1 basis point. So not much of a reaction. Maybe the move in gold in the previous 2 days from today. I mean, we moved like almost $100 each day. Yesterday, it might have been related to this announcement, so maybe that's why gold, as I speak this morning, has sold off a bit, but it's still almost $200 above from the level we saw in the beginning of May. I said I wanted to speak about education as well. So I saw a post on Instagram, pretty interesting. It talks about study why Rockefeller designed schools to build loyal workers, not creative leaders or thinkers. And then it says, in the early 1900s, John D. Rockefeller was the richest man in the world. And then it continues, it says, in 1903, he funded the General Education Board to reshape the U.S. school system. He famously said, this is the Rockefeller, I don't want a nation of thinkers, I want a nation of workers. This was not just a quote, it became the blueprint for modern education. Schools redesigned to focus on obedience, repetition, authority, and routine. You weren't taught to lead, you were trained to follow. You memorize facts, not how to think critically or question the system. Why don't schools teach money, taxes, freedom, or creativity? Because that creates free people. I'm going to stop here, and I'm going to recommend a book that I've known about for many years. I'm not sure if I have it, but I've listened to the author many times on alternative media this is probably 15, 20 years ago, so I've known about this for a long time. The book, I'm going to put a link, or I'm going to put the title below in the description, and you can look it up on Amazon. It's called The Deliberate Dumbing Down of America by Charlotte Thomson Iserbyt, and she's a very interesting lady. I'm not sure if she's still alive, but her dad was a Skull and Bones, and she found out about it by accident when she was helping her dad clean the house around, and she found this book, and it was a list of all the Skull and Bones members, and his name was there, and they spoke about it. So very interesting lady. I think she was at the Department of Education under Ronald Reagan, and she advised Ronald Reagan to shut it down, but they never did. So I recommend this book. So back to the Fed and not QE. And I said there is precedent for it. QE, of course, is quantitative easing. The Fed has been doing quantitative tightening, of course, since the middle of 2022. It's supposed to stop the quantitative tightening, I think, by June this year. But back to not QE, and that's because back in 2019, and it was around September time, when we had the Repo Crisis. And the Repo Crisis basically was when the major Wall Street banks stopped trusting each other and lending money to each other overnight with the backing, with treasuries as collateral. I mean, if you can't lend money on the collateral of treasuries, it means that you don't trust the counterparty. And the repo rate spiked from around just over 2%, which is pretty much where the Fed funds rate were, up to like 10%. So there's huge trouble because the repo market is kind of like the lifeblood of Wall Street. And if that goes, there's no liquidity in the system. And as I said earlier, I think last week about the Treasury market, it's Wall Street that provides the liquidity to the hedge funds, and the hedge funds are a big part of the Treasury market now because foreigners are not buying as many Treasuries. So what happened September 19 is that the Fed had been doing quantitative tightening, QT, and then all of a sudden it started picking up again. And people were saying, oh, look, the Fed's doing QE again. And they said, no, it's not QE. Yeah, that was the joke. People said, oh, it's not QE because... But it was. For all intents and purposes, it was. The balance sheet went up from 3.7 trillion to like 4.2 trillion by March. And then, of course, you had the explosion of QE from March 4th to June 10th. So the balance sheet, or the Fed, printed over 3 trillion, well, about 3 trillion actually. And then they stopped a little bit, and then they printed another, and they printed, let's see, another 3 trillion by the spring of 2022. So that's why I said the fact that they're not, that they're doing something now, they're actually buying treasuries here, and we're going to look at that. That's a signal that something's wrong with Wall Street, the plumbing of Wall Street. That's the term I wanted to use earlier, and I didn't. That's the repo market. There might be other troubles in the Treasury market as well. And we're seeing some auctions, and the Fed has had to step in with what's called SOMA operations. And what's SOMA, S-O-M-A? Well, it stands for System Open Market Account, and it's the Fed's portfolio basically. So I saw this interesting post here on X yesterday by the Coastal Journal, and it says, breaking Fed, not QE. So the Fed bought $14.8 billion worth of 10-year bonds today. So it was to do with an auction. Maybe if they hadn't bought these bonds, the auction wouldn't have been as good, and Treasury yields would have spiked. So they're in there doing not QE. So I think in the case now is not maybe the repo market yet, but it's just the fact that, they're monetizing the debt. There's too much debt in the system. We've heard of how much they need to issue this year, the Treasury, like 8 trillion or so. And the financing costs continue to go up. And Mr. Besant is watching very closely the yields. And on top of this 14.8 billion yesterday, they bought the 20 billion the day before. That's so almost 35 billion 2 days of not QE. So right now the Fed data, they've got the amount of how can I say, they've got the total that is on the Fed's balance sheet as of April 30th. I think the weekly data comes out Thursday night, so we should know by Friday if this is starting to pick up, even though this has been this week, right? So we need to keep an eye on this Fed chart of assets, total assets of the Federal Reserve. As we saw earlier, they started doing this not QE back in September. up until really the beginning of March. So for 6 months, they were doing not QE, and all of a sudden, it exploded, and the balance sheet went from around 4 trillion to almost 9 trillion in a matter of 2 years. And I think this time, though, we could see the acceleration after the not QE, maybe even sooner than 6 months. Maybe that's why gold is rebounding so sharply, because Wall Street knows, the big banks know there's a problem. So it's 6:45 a.m. London time. Yeah, we have seen a correction in gold, but gold went up. I looked at it yesterday, from May 1st to yesterday, May 6th. It went from a low around 3,200 to like 3,440 overnight. So over $200. So we can expect to see these sharp moves up and down. But I think right now it looks pretty good. Gold, we're still above last week's high of 33.53, I think. It's now 33.83. It's down 44. The low's been 33.60, which is interesting, which is just above last week's high. So that's going to be support now. The high is 34.40, as I said. Silver is down 18 cents. So outperforming a little bit. It's at 33.03. The low was 32.81. We're seeing the stock market, the Dow futures up 0.5%, NASDAQ 100 up 0.5%, and S&P likewise. The currencies, yeah, I saw the dollar dropped quite a bit yesterday versus the euro and the pound. I don't really follow the dollar index that closely, but I think it's below 100. What else? We're seeing crude oil up slightly here, up about 1%. WTI is still below 60. High-grade copper is down 1% at 472.70. Let's have a quick look at the Treasury market. Well, yeah, the 10-year yield still hovering around that 4.3 level. It's at 431. The 30-year is at 480. So things are still under control. And of course, I think it's today that we have the Fed decision. They're not expected to do anything in terms of cutting rates, but we need to keep an ear out for what Jay Powell says in his press conference, and also the projections from the different members of the FOMC, the dot plot. It's to do with the economy and prices or inflation. And with that, I'm going to wish you all a very good day. Take care. Bye.